Hello, good day. This is the daily analysis of the EURUSD pair for January 6th. The price moved as predicted to the FG zone. It's been a week since it optimized on the daily time frame and reacted to 4 levels. It collected liquidity from this area and then entered a bullish phase, which eventually reached the edge of the rejection block zone in this area or at the 50% level. This rejection block zone has reacted, and by checking the RSI, we see that it has reached the resistance level between 58 and 62. The RSI is reacted, and the swing low located here is in the RSI potential zone, which suggests that from this area, the price is expected to move in the trend. It continues its downward movement until it possibly heads toward the next support, so keep an eye on this area. If the price forms a lower low in the rejection block area here, and we eventually see weakness in the trend, we can enter a buy position in this area, targeting higher levels, and if it forms a swing failure pattern, collects liquidity toward the next support, and finally gives a candle close inside, we can use this opportunity to enter a trade. Set the stop loss behind the zone, targeting higher levels. Also, if the price comes with a bearish displacement and continues its downward trend, it can collect liquidity toward the sell side in this area and eventually react to the order block candle in this section or this part. By reviewing up to this 1-hour time frame, we can see that here, as predicted, the price had a short-term correction. It entered the FBG zone and eventually reacted to this area, which caused the trend to move downward. It continued its move, collected liquidity towards the sell side, and finally closed in this area, which set up a Ryan soldier strategy for us. With the price closing in this section, we could enter a buy position, targeting the edge of the BPR here, or the edge of an order block. Here, if needed, we could also look for a confirmation of the trend continuation. We could enter a position on this candle and set the stop loss behind the swing, targeting the BPR here, or the edge of an order block. In this section, as we discussed in yesterday's analysis, we said that if the price forms an RSI divergence, right here, and enters the oversold zone, forming a divergence here, we can use this situation as a signal to enter a position. Right now, we can see that the price has formed a bearish divergence here, which indicates a bearish market. From this point, we can use the Ryan soldier strategy to enter a sell position here. We set the stop loss behind the swing and target the swing low. In this area, the BPR zone, along with increasing momentum, can make the swing low target here a suitable area for trades. By analyzing the 15-minute time frame, we see that during the Asian session, an accumulation formed, and in the London session, there was manipulation. Here, what happened is that the price collected the buy-side liquidity. Finally, it reacted to the order block area here, and now it has entered a bearish phase, which could continue its downward trend and collect the sell-side liquidity here. And in this FWG zone, or in the OTE zone, we can look for a buy position to the upside in the market. If market momentum increases, we should consider lower price targets, so that if momentum increases, you can avoid entering a position against the trend. If a reversal is identified in the trend, we can enter a buy position and reach higher price targets successfully and profitably.